All right, I'm going to make a quick video explaining how I make most of my big returns in the stock market. What I like to do is combine fundamental analysis, which is just the underlying performance of the business behind the stock. And I combine that with basically technical analysis, which is where the price action of the day-to-day trading moves. So when a stock goes up and down, basically what that is that sellers auctioning to buy and sell this stock. So when the price action moves up, the buyers are winning and the sellers are forfeiting, for lack of better words. And when it moves down, the sellers are winning and the buyers are forfeiting. So that's just kind of the best way to think about it. But really, price action has nothing to do with the underlying value of the company itself. So I'm going to look at a company called Nomad Foods. This is a frozen food manufacturer based in Europe. I think they're headquartered in England, if I'm not mistaken. And this is a really interesting opportunity. I'm not a financial advisor, just sharing what I do and how it works for me. So we're going to pretend that Nomad Foods is a house because that's the best way for us to understand it, right? We're going to say that Nomad Foods is a $100,000 house that you can buy today. Well, when we're looking at it, the price to sales is 0.54, which means that it is trading at half its revenue. So this $100,000 house, you turn it into a rental, you're able to rent this thing out for $200,000 a year. The free cash flow yield, which I'll talk about in more detail here in a second, is 20%. That means that after your revenue comes in, you've got to take all your expenses down from the business. So you've got your cost of goods sold, you've got the cost to operate the business, you've got your sales reps, you've got the people in corporate, you've got to pay your taxes, of course. After all of that is taken care of, 20% is left over to you, the owner. It's free cash because it's already been taken care of with the business. So this house is going to rent for $200,000 a year or $16,000 a month. Remember, you paid $100,000 for this house. You will never find a house that you can pay $100,000 for and will rent for $200,000 a year. This right here is why the stock market beats real estate hands down if you can figure out how to make some money doing it. $20,000 of this free cash flow comes into your bank every month. This is after all expenses, taxes that have been paid. So we look for these crazy opportunities where the market does not like a stock for whatever reason. In this case, Nomad Foods has historically been a really strong growth company. They had a couple of weak quarters due to inflation, and the market just killed it. I mean, let's look at the long-term chart here on Nomad Foods, and it's pretty wild. Let's see. Oh, here we go. This is where we want to go. Look at this. So we had our IPO back here, popped up, everyone loved it, sold off down to $6 in 2016. You could have bought it and rode that wave and made 300% from 2016 to 2021. But if you bought up here in 2021, you would now be down about 60%. And this is exactly what we like to look for. So I like to buy companies that the market doesn't like anymore. I like to wait if I can. Sometimes I can't wait because I get excited about it. But I like to wait for things to just kind of look like they're moving sideways here. Buyers don't know if they want to buy it. Sellers don't know if they want to sell it. So you get this sideways consolidation of price action. And then eventually someone wins, the buyers or the sellers, and you get what's called a breakout or a breakdown. So here we have we go back a few years, we have a lot of sideways action, and then we got a breakdown 2025, early part of this year. And now we are hoping, nothing's a guarantee, of course, we are hoping that this breakout leads to nice, strong price action. Probably, if I had to guess, what's going to happen is the stock's going to come back down and then just slowly start teetering its way up. But who knows? I can't tell the future. What I do know is that this is a rental house that I paid $100,000 for. It rents for $200,000 a year, and I get $20,000 a year in cold hard cash as a business owner that I get to do something with. Now, I don't get to make the decision because I'm not the CEO. They decide on your behalf, but they're giving you a 5.5% dividend yield, basically And they're also buying back a ton of stock, which I'll talk about in other videos. But they are buying back 227 million in stock over the last 12 months. So just real quick, I'll touch on this because we're talking about it. 316 million in free cash flow over the last 12 months. You got 91.5 given to as a dividend, 227 in stock buybacks. So they're giving you 318.5 million. So they're actually taking a little bit of debt to return stock, to buy back stock, I should say. So 318 million given back to you, the owner, on a $1.9 billion market cap. They are giving you a 16.5% return every year on your money, regardless of what the company share prices do. And I almost guarantee they're going to be going up soon.